Alright, okay, good evening. Okay, we'll get started for today's session over here. Now, as usual, what we're gonna do is to quickly look into the overall events that we have for this week. And then after that, I'll jump into the analysis for some of the major currency pairs to cover what are some of the outlook and opportunities that we have. Okay, and then after that, we'll have a quick Q&A to answer some of the questions. And then after that, we'll wrap up the session over here. That's how we usually run things, okay? So I try to keep this within a 30 to 40 minutes time, okay? So that, we want to be concise and then straight to the point, okay? So with that said, you can take a look at the screen right now. We do have this week's event calendar over here. Today nothing much. Tuesday, 16th of May over here. We do have the Canadian CPI coming in year on year. That would of course be quite significant, okay, because that's basically tracking the inflation data. And you can see the expectation over here. As of now, basically we're expecting a drop in CPI, which means that traders and investors are expecting inflation to come down. And of course, if that's gonna be the case, then that will ease off some pressure from Bank of Canada to continue hiking rates, right? And that would also tell us that potentially if there's a huge deviation to the downside, then that might be a weakening of the CAD. And of course, if the data comes out, strongly in the opposite, which means that we have a very huge deviation to the upside, which means inflationary pressure is still there, then of course we may see the volatility on CAD spiking to the upside, right? Which means Canadian strengthening in the short term. So this data here may create some volatility tomorrow. So if you are trading any Canadian related, at least be aware there's such event coming in. Okay. The later part of the week, if you just look through, okay, not much of a significant data that we need to pay too much attention to. Thursday we do have some Euro bank like French holiday, German holidays. So that might be some slower move in the Euro side of things. So overall this week I think is relatively quiet if you kind of compare it to the previous week. Okay, so this week here I think to me what we call tier 1 more important data is the Canadian over here. Okay, so that's the event side of things. So if you jump over to the technical analysis, very quickly we'll walk through the dollar index first. So from a Elliott Wave point of view, okay, we kind of saw the dollar strength last week, especially on Thursday and Friday, right? Dollar spike up quite significantly. But overall, from a 4-hour time frame perspective, I'm actually still bearish on the dollar, simply because this structure here seems to still suggest that we may see a little bit more downside, okay? And of course, the key zone here is basically around 102.65 and 103. And we did see the market as of today giving us a pretty decent rejection of that 102.65 area, right? Just right around that. And of course, we do have a little bit of confluence of the channel structure. So my perspective over here is this week going forward, of course, if you can continue to see the dollar weakening a little bit more here, today, especially giving us that V-shaped formation, and of course that would strengthen the case where we may see dollar weaken further. Alternatively, if this week is just basically going to be consolidating and maybe form what we call a crawl pattern around that zone, then of course that would also tell us that there's a high probability the dollar may continue to weaken, okay, at least from a dollar index point of view. So that's my point. That's my perspective. Going into this week. Okay, ideally, of course, we won't just see this drop. If we don't, then the next scenario here is a crawl for us to maintain bearish on DXY. If this starts to drop slow and give us a corrective pattern that looks something like that, then of course we'll rotate from a bearish bias to potentially starting to look for buy opportunity in the dollar, at least for the short run. Okay, so let's see how it goes. Those are some of the plannings that we have going into the week. Now, some things that I'm observing that is giving a little bit of a diverging point of view is that what the dollar index is suggesting from an overall technical analysis point of view versus some of this major pair here, we don't really have a full alignment. Okay, so you can see from euro dollar perspective, the drop over here kind of broke off from this previous structure, quite obvious. And euro dollar over here, the direction that I'm focusing is quite clear, right? We're basically interested in sell. There's no buy setup, there's no reason in buying the euro dollar as of now. And for me, the only direction that I'm gonna focus on euro dollar is definitely sell, right? But of course, not selling it at where we are right now. But ideally, I want to see a very clear three-wave corrective pullback, maybe somewhere towards the 50 and 618 fips. That would give me a very, very nice opportunity to sell the euro. This one here, probably the setup may not come the earlier part of the week. Maybe the setup will only come to me or come to us, somewhere between Thursday or Friday for the week. Okay, so this is quite clear, right? Euro dollar, we're looking at sell, but you can see dollar index. If this were to continue to drop, then of course that relationship between the dollar and the euro may not always be 100% correlated. Okay, so this is something that I'm observing right now, where if the dollar index continue to drop, perhaps euro dollar can still fall, right? So what happens here is maybe the euro is going to be significantly weaker than the dollar, and euro dollar as a pair itself can still, of course, fall lower, right? So this is something that I think some traders who are very focused on correlation may be struggling a little bit, because then it kind of like, if two instruments doesn't really have these kind of common correlation anymore, they will struggle a little bit, right? Because internally they will be like confused, so what should they be doing? So my philosophy in approaching correlation over here is I never use correlation to make a trading decision. I'm always trading each chart as it is, right? Independent. So I'll just look at, if I'm trading euro dollar, I look at euro dollar, do I have a setup to buy or to sell? And then I simply use correlation as part of my risk exposure management. Okay, so I'm actually using the correlation concept and philosophy mainly to just manage risk. Okay, not so much on looking for trade opportunities, right? So euro dollar here, I think quite clear. We're basically looking at sell. GBP USD quite similar here as well. If you can get a decent pullback towards that 50 and 618, I think this week we're looking at sell opportunity as well. So euro dollar, pound dollar, we're quite clear in looking at sell opportunity. Aussie dollar, a little bit on the sell side as well, right? Quite similar in terms of euro, pound, and Aussie over here. Again, if you can get a decent pullback, we'll look to sell it back to the bottom of the channel, right? So this tree, I think quite clear the structure. Though they may tell us in a different way, like pound dollar here may be the end of fifth wave and we may see a bigger move back down. Aussie dollar here potentially still within the bigger corrective move, so we're basically just looking at trading it back to the bottom of the channel. So the targets may be different, okay, but the direction on euro, pound, and Aussie kind of similar. We're looking at the downside. All right. And then for dollar Canadian over here, it's a little bit on the neutral point of view, but I'm more inclined to be expecting this to come back a little bit more to the downside. Okay? So this kind of giving us a ideally, right, a classic 5-wave move. So A, B, C, 1, 2, 3, 4, 5 to do an A. This may be B wave, and of course over here we may be seeing a 3-wave move to complete the C wave. Okay. That's what I'm looking at right now. So as long as the price is still respecting this channel and not breaking above impulsively, I'm still holding that slight bias where we may see this drop back before that bigger move back up. Okay, but of course things may change, right? So if we kind of see the dollar CAD just push up, break that channel very strongly, that's a little bit of a corrective structure here, Then of course we'll abandon that bearish bias and then we'll rotate to look for buy opportunity from there on. Okay, so that's on dollar CAD. Keep an eye on that. I think this week, closer towards maybe Wednesday onwards, we may get some clarity on what is likely going to develop. Next up, we have the dollar yen. Now, dollar yen as of today kind of broke above that channel. Okay, but so far, price is basically still testing and respecting this zone, right? Somewhere around 101.23. If I were to remove it, I think right now it's more important to keep an eye on around that 123 extension. Depending on the time frame you're looking at, of course, if you're going down to the 1 hour chart, you may start to observe a little bit of a divergence build up eventually. Okay, you can see here we have the extreme zone. So this may continue to develop like that, and of course RSI seems to be already losing momentum, so that will slowly build into a divergence. Now, if that's going to be the case, then we have a very nice cellular opportunity over here, because that will give you that 1, 2, 3 combined with a cross structure with a divergence, and then of course a bigger impulse corrective structure pattern. Okay, so that will be to me, that would be what I call a no-brainer trade. It's not necessarily going to be 100% winning, but no-brainer meaning the chances there, just take it, right? And something like this will be able to set up for a potential sell, right? So your conservative stop will need to go above that recent high, and then your target here, you can place somewhere around 132. A simple risk reward of 2.2, I think that's pretty decent. Okay, so that's something to look out for. I think this trade here, if you're interested, you can keep an eye on it. Potentially you can get involved in it by tomorrow, right? At least from 1 hour time frame. All right, yeah, so that's on the dollar yen. XAU USD gold chart over here. Short term I'm expecting downside, but from Elliott Wave point of view, we may get a little bit of a bounce back up to complete the flat structure. So impulse 1, 2, 3. Okay, a flat structure. Maybe back towards like 2050, and then that's where we can potentially look for a sell back to 1950, and then we may get a long-term buy from there on. So if you're interested in gold, I think give it maybe a few more days, maybe by Wednesday or Thursday, if you can get this to go back up slowly, right? So kind of mini little double top structure here, you can look for a sell. Right, so that's on gold. Quick one on crude oil. Okay, it's pulling back. So what we want is, of course, a little bit of a pushback, a little bit of a drop. So you want this to come slow. If you can get that, of course, back to 68.7 to 67.5, that will be a pretty decent buy opportunity on WTI. Okay, so that will be a very simple structure of a impulse correction, impulse structure. Especially we have this little double top, little double bottom over here, and a very nice little rejection. Okay, so quite a bit of, I think, setup that is building up within this week. Okay, again, if you're looking more towards swing trading on the 4 hour or even the 1 hour time frame, I think this week is going to be a little bit more interesting for us, right? So there are a couple of setups going in. Okay, S&P, not really the clearest of all, but of course, what we are seeing here, at least for the near term, is we did get a bounce. This seems to be developing correctively, right? So if this comes out a little bit more, we may still see that bounce back, right? Especially if we can get supported around that 50 and 618 pullback. Looking at how things are developing over here, I think, you might want to just take away the 50 and just focus on the 618, because then that would build in a very nice little channel around that zone, right? So you can see that, right? So back towards that 618, I think that's a higher probability, and probably you focus on the 618, you get in at a better entry price as well. So keep an eye on S&P. For those of you who are interested in the stock market or even the index trading, okay, any decent pullback towards like 4090, that will be an opportunity to look for a buy setup. All right, BTC, okay, crypto side of things, before we kind of look at some of the questions that you guys may have. So BTC over here, last week Friday, with dollar strengthening, it did push price down lower. Okay, hit the low at 25850, and then we did get a very decent bounce. Okay, so this is what we call a V shape. So for BTC over here, if you just go down to a lower time frame on H1, for example, I would say you want to wait for maybe a little bit of a pullback towards the 50 and 618, and ideally if this is going to come down slow and corrective in nature, we can look for a buy opportunity. Okay, so this may develop within this week here as well. Maybe by Thursday or Friday, if we can get a corrective pullback somewhere around 26725, 26520, that would be a decent buy opportunity for potentially a long-term pushback up on BTC. Okay, so the overall structure here, we're looking at Bitcoin from a swing trade point of view, is that from this very little bottom here back in November last year, we may be developing as a 1, 2, 3, 4, and then wave 5 developing as an extension. Okay, so that may be the case. So over here you can see this structure seems to be still corrective in nature, so we're still bullish bias as of now. Alright, if you don't trade BTC, I think the other one is gonna be on Ethereum. Okay, I think Ethereum may be also giving you a pretty nice little setup here. But for me, I'm actually focusing a bit more on BTC, right? The simple reason is because this may still do something like that, come back down before the bigger move, right? Because we didn't really hit that 100% yet. Most of the time it does that, right? Most of the time, not all the time. So this one here, does it need to come back down before it goes? No, right? It's just a matter of like personal preference. In such situation, do you want to focus on it? So for me, I'm actually more into BTC right now, okay, instead of Ethereum, okay, because Bitcoin here, if you kind of look at this, okay, we can't have that 100%, right? We have that 100%. So Ethereum, we don't have it, and for that very reason, I'm just focusing a little bit more on Bitcoin. Cool. Okay, so those are some of the things that I'm looking at this week, right? Hopefully that also gives you some ideas into what are some instruments and opportunities for you. Okay, very quickly, I'll take a look at some of the questions that you guys may have, right? So over here, I'm seeing from YouTube site, LW is asking, can you check on Kiwi Yen? Let's take a look at that. Okay, cool. So I seldom trade the New Zealand, right? So you can see I don't really have much of an analysis done. Okay, but I think from a 4-hour time frame perspective, this is pretty clear to me, right? So if I'm gonna start doing the analysis, I'm gonna build it up from here. That may be a simple 3-wave move, right? And often after a 3-wave move, you can see this decent rejection over here. This, I think, that came back to the 50 of this. But what can potentially play out is something like that. Okay, so you also mentioned over here you do have a buy around 84.15-ish area, which is probably somewhere there, right? Yeah, so I think you probably traded that 1 hour kind of like breakout to the upside. So good. So what I would suggest over here, if you're in a buy here, price is trading somewhere around maybe about 50 pips of profit for you right now. To be honest, 50 pips on yen pairs is not a lot, okay, because yen pairs are generally more volatile. What I can suggest over here from my perspective is to shift your stops to break even. Let this trade run, because if this were to continue going up, then you want to ride onto that, right? But over here you can see one key level to definitely be aware of is somewhere around 8480, which are probably getting quite close, right? Because my view here is from this little top, we get a nice little rejection. Now what can happen from here on, in terms of my primary expectation and forecast, is this would probably turn into something like that. Maybe come back to its 50 and 618, and if that's the case, we may see this drop back lower towards 8317. Okay, the reason is because the market tends to move in tree, right? So you can see over here 1, 2, 3, 1, 2, 3, and therefore we generally would expect a set of 3, right? So 1, 2, 3. Now it's not all the time like that, but potentially that's what I'm seeing right now. Okay, that's the first scenario, right? I mean, you don't need to close your trade right now, because what can happen is this can still go back up, and we may change that structure into a crawl that looks something like that, right? And if that's the case, then maybe the market will be testing this high again before that drop back down, right? So again, you want to be thinking in terms of probabilities, right? What can potentially happen, what are chances of it happening, and your role again is to just simply manage whatever position you have, and let the market tell you, right, which one has a higher probability of happening. So not right now you have a buy, you have the chance to shift your stops to break even. Just keep it there with a zero risk, because once you shift it to break even, there's no risk involved. Then potentially you can write this up if that's gonna happen, maybe somewhere around 8580. You may take partial profits, because then that may also turn into something like that, right? Yeah, so that's my view. Again, I might be wrong. I wouldn't know what exactly is gonna happen in the market. As I mentioned, you just need to track what is the market telling you. Okay, so as of now, we don't really have much information because this is a mini V, right? Yeah, so keep an eye on that. I mean, what you can do, of course, you can also go down to lower time frame. If this starts to do a little bit of a crawl on the hourly, then what may turn out is this may come back down, this may go back up, and as I drew on the 4-hour just now, this may turn into something like that. So if you start to see a crawl here, you may start to trail your stops a little bit more aggressive to protect more profits. Okay, and if let's say this happened, you probably look to sell it there for another trade, right? So that's something to look out for. Okay, yeah. Good. Chia over here asking about Hong Kong. Oh sorry, yeah, HS50. So I think that will be A50. Okay, China index. Right, so I think we can cover this a little bit as well. I think overall, I mentioned, Hang Seng would be a little bit better, which is the Hong Kong, compared to A50, which is China, simply because of the chart pattern that is developing, right? So if you take a look at this structure here, it's still very, very corrective. If you are familiar with pattern, you do realize that this looks very, very similar to the Aussie, right? So again, all these things are duplicable once you are able to identify those patterns, right? So right now, what's my view on this? I think quite similar to the Aussie. We're probably gonna expect a little bit more like this, right? We want to see how it develops here, but there's a good chance we may come back and retest this low before maybe any kind of like significant bounce back up. Okay. So as long as it's still within this channel, right? There's a good chance to retest the bottom before that big move back up. Okay, what can happen is this can still do something like that, and then come back down, test that and then go. Okay. So of course, every time we just get a V shape, we don't really have much information, right? But from a bigger point of view, it's not a very bullish kind of like situation. Okay. So when I see something like that, I would say I'll probably not want to spend too much time and focus my attention on this particular index or this particular instrument. Okay. If you're interested in maybe like China markets, maybe you can take a look like Hang Seng, right? So let me maybe quickly update a little bit on the Hang Seng chart. This is still technically valid in terms of how this is playing out right now. Let me just shift all this, it's irrelevant now. What may still be relevant is that price didn't really break this low around 19364. We can't get a 3-wave move here, a decent bounce. This can be an expanding flat structure. Okay, now I don't typically trade an expanding flat, it's very tricky. Okay, but if let's say that's going to be an expanding flat, the next target potentially you can look up for is 1618, which is the internal wave 3. So what you want to wait for confirmation is a little bit of a corrective push here. Okay, if you can get that, of course, then that's your buy setup to look for a target back towards 20980, right? And then if that's going to happen, then of course we are looking at a bigger move back up already. Okay, so then that will open up the possibility of a 1-2, wave 3, wave 4, and then wave 5. Okay. Yeah, so I think this one is again still better than China, right? Hong Kong index HSI is generally still better than A50, right? Okay, another question I see over here. Amos is asking, could you do a quick explanation on how I use RSI divergence? Yeah, sure. Okay, let me just see if we get. I mean, just now I mentioned briefly, right? Dollar yen is potentially developing, right? So the idea of a divergence is often suggesting that there's a lack of momentum, and therefore a potential reversal, right? So you can see this is a peak, right? And of course, RSI kind of show an overbought condition here. Now, if this continue just develop into a crawl pattern, so we get a higher high. But if let's say RSI here doesn't peak as high as the previous one, right? So you have a high here, but it's actually lower. So that's a divergence, right? Because this went up, this came down. So that indicate a lack of momentum, and again, usually that suggests reversal. Right. Now I don't just trade the divergence by itself. But again, I can't use it as a complement to some of the patterns that we look into. Okay. So like a crawl, usually there's a good divergence, right? Even on a lower time frame. And then of course we use a little bit of like patterns here as well, like a 3-wave move up. We kind of get a little bit of a divergence at this completion zone that kind of add some, I would say, confirmation to that trade, right? So I don't use divergence independently, but I kind of apply that in the context of a pattern that I'm interested in, right? Yeah, I think that's the part on it. Yeah, so generally I think the clearest as of now would probably be the dollar yen example that we can talk about. Okay, BTC, if you're looking at targets, my suggestion is keep it open. You don't want to limit your upside, right? Because you just want to trail your stop. Because if this really takes off, you never know how fast it can go. So you don't want to have a TP to kind of limit your potential upside, right? So I would say if you're looking at BTC buy, my suggestion here is keep your take profit open. Don't have a fixed target, and then just use a trailing stop management to manage your position to maximize that profit. Okay. Okay, last question we'll probably take here is from Giovanni, asking about Euro Yen, right? Okay, so okay, Euro Yen here, in terms of Elliott Wave, may not be the clearest of all. But if you're more into some of the traditional patterns, what you can look out for is a potential head and shoulder pattern. Okay. We can't have this little head and shoulder pattern potentially developing. Okay, you can't have a neckline over here as well. And you can look up for the part where if this continue go back, maybe retest at 618, that would give you the right shoulder development. Okay, that would give you that right shoulder. And of course, conventionally, what traders would do for head and shoulder is they break the neckline and they will trade from there, right? But I think if you're looking at that, then you're giving quite a big chunk of your potential profit as well. So most of the time, you want to anticipate the head and shoulder pattern developing, right? Which means you're trading the right shoulder. So of course, this doesn't mean that it's naturally gonna come back to 618 and bounce, right? But you want to keep an eye on this area, right? Of course, you might have your own strategy to get involved in the trade. Okay, whether it's price action, whatever it is, patterns, divergence, or you use some indications from indicators, whatever it is, right? But the idea is just keep an eye on this area around like 149.50. If you get a signal from there, of course, then you can look for a sell. Okay, I mean there's a technically this can be an expanding flat structure from Elliott Wave point of view, but again, I highlighted I don't trade the expanding flat, right? Because to me, it's not the clearest of all. It's very difficult to kind of anticipate where the expanding flat is gonna complete. There are some guidelines to that, but again, it's not the clearest, it's not the best. We can't get a very nice confluence at 1618, and we'll keep things simple, so 618 will do, right? But yeah, that's potentially what we may get from euro yen. Okay, so keep an eye on that, right? I mean, that's the area 149.50. Okay, just to very quickly show you some idea about what I mean by expanding flat, pound odd. Okay, yeah, so something like that will be what we call an expanding flat, right? So you can see a drop 1 2, and then we're expecting this to go back up, retest this little top, and then drop, right? So that's the part where we're anticipating this is where the area we can look for sell, right? So quite similar to the euro yen, where it's potentially developing into that, right? Okay, so it looks something similar. Again, not 100% that's going to be the case, but the probability is there. Okay, good. Yeah, so I hope today's session can give you a little bit of idea, right? Some of all these things that we look into, okay, some of the potential outlook of the market, okay, and of course through that short little Q&A, hopefully give you some insights, right, into how we use Elliott Wave as well. Good. Yeah, so that's all from me. Just a very quick wrap up over here. So today's session, you know, whether you're watching on like Zoom, YouTube, you know, and of course concurrently I'm also streaming it right now from YouTube directly to trading.live. I think some of you are from there as well. Now I won't be able to handle, you know, so many platforms questions, right? So but of course you guys can still hear and listen to, you know, me sharing. Okay, so the closing over here, just want to update everyone and share with everyone that today's session, you know, every Monday session is actually kind of sponsored, right? You guys get to enjoy it for free, because this session is actually sponsored by Everything Trading, and then of course the partner for Everything Trading is the Zenfinix broker. Okay, so of course we also have a lot of offline events, right? And one of the upcoming one that's happening in Malaysia, Kuala Lumpur, is this coming Saturday. We're gonna be having a full day Elliott Wave Masterclass workshop from 10 a.m. to 6 p.m. It's an offline event. It's an in-person training workshop. And it's gonna be conducted in Chinese Mandarin, right? So again, if you're interested to find out a little bit more about this full day workshop, how you can actually attend and join, of course, given that you are based in Malaysia and Kuala Lumpur, right? Because it's an offline, you need to be there. Okay. What you can do is you can reach out to the Zenfinix team and Everything Trading team, right? So what you can do is you can click on the link where if you're in Zoom, right, they already have drop it in the chat box. You can actually just click on the link, reach out to them. And then RSVP for this upcoming Saturday. You can find out a little bit more how you can RSVP onto that. If you're watching on YouTube, okay, I also have a WhatsApp link that links you to Everything Trading and Zenfinix team as well. It's already in the description box. Okay, just scroll down, you can look at it. And then of course, if you're on if you're on trading.live platform, I'll just drop that link over there very quickly on the chat. You know, I think you can't just click that link directly on the chat, but what you can do is just copy that URL, paste it on your browser, and that will direct you to your WhatsApp. Okay. But take note, this is an offline, right? Basically, it means that you need to be in Malaysia, okay, or else you won't be able to attend, right? Because it's a physical event. Okay, so that's all from me for today. All the best to your trading for the week. Okay, I think Chia here is asking any event in JB. Not this weekend. So far they haven't really planned out on that yet. But if we do have, we'll definitely keep you guys updated as well. Yeah. So good. That's all from me. All the best to your trading, and we'll see you guys.